If money always feels tight, if your paycheck disappears faster than you expect, and if budgeting never seems to fix the problem, there's a good chance one expense is hurting you more than any other. And it's not the one most people think. Today we're talking about the one expense hurting beginners the most. This isn't about shaming anyone. It's not about cutting joy out of your life. And it's definitely not about extreme frugality. It's about understanding why money feels harder than it should, and how one category quietly removes your breathing room. Let's break it down. When people hear this topic, they usually guess coffee, eating out, small impulse purchases. Those things get a lot of attention. But here's the truth. Small expenses are visible, but they're rarely the real problem. Cutting a $5 coffee doesn't fix a $500 mistake. The expense hurting beginners the most is quieter, bigger, and easier to ignore. The one expense hurting beginners the most is fixed monthly payments. Not one specific bill, but the collection of them. Things like car payments, phone plans, subscriptions, financing plans, buy now pay later purchases. Individually, they don't seem dangerous. Together, they eliminate margin. Monthly payments feel safe because they're predictable, they're familiar, they're normalized. But predictability doesn't equal affordability. Monthly payments hurt beginners because they lock in future income, reduce flexibility, make emergencies harder to handle. Once a payment exists, it doesn't care if your income drops. An emergency happens, your priorities change. It's due every month, no matter what. This is how people end up paycheck to paycheck even with decent income. Here's what really happens. One payment becomes two. Two becomes five. Five becomes 10. Each one feels manageable, but stacked together, they create pressure. This is called the payment stack. And beginners don't feel the damage until it's too late, when there's no margin left. Beginners fall into the monthly payment trap because payments are marketed as normal. Total cost is hidden. Approval feels like permission. The question becomes, can I afford the payment? Instead of, can I afford the commitment? That mindset shift is expensive. The solution isn't extreme cutting. It's intentional decision-making. Here's what actually helps. 1. Audit your monthly payments. List every recurring charge. 2. Question necessity, not comfort. Just because you're used to it doesn't mean it's helping you. 3. Avoid new payments whenever possible, especially while building stability. 4. Buy margin before upgrades. Breathing room is more valuable than convenience. Reducing just one payment can change everything. If money feels tight no matter how hard you try, don't blame small purchases. Look at what's already locked in. Monthly payments don't feel dramatic, but they quietly decide how much freedom you have. And beginners don't need more discipline. They need more margin. Disclaimer: this page and content is for educational and entertaining purposes only and does not constitute financial, tax, investing, or legal advice. Always consult a licensed professional before making any investment or tax decisions.